Good evening, everybody. Thank you for joining us here tonight, and welcome to the second quarter episode of On the Move for 2022. As always, I'm your host, Rich Checkan, along with my co-host, Chris Blasi. And tonight, we brought in a good friend of Chris's, John Denza. Chris will introduce him here in a second. He's with ErisX. He's a crypto expert, and the reason we brought him in is basically we were looking at the Q&As at all the previous shows, and we found out that no matter what on earth we were talking about, everybody had questions about cryptocurrencies, Bitcoins, Ethereum, whatever the case might be, Litecoin, Dogecoin. So we're going to cover that tonight in total, and we're going to hopefully take that debate a little further about what's better for your portfolio, gold versus Bitcoin versus crypto. And I think you may be surprised by some of the answers, but you may not. But I'll start off by first introducing my co-host, Chris Blasi. He has got 30 years experience in the financial services and technology services industries. He's the founder of Neptune Global, creator of the patented PMC ounce, the precious metals composite ounce, which many of you who have followed us over the years know full well what that wonderful product is. It's a combination of all four precious metals. He's worked with major broker dealers. He's worked with boutique firms, both in the financial services industry and on the informational side of the financial services industry with the technology side of things. He's spoken various outlets, whether it be the Wall Street Journal, Investors Business Daily, Market Watch, Street.com, USA Today, and MSNBC. And of course, he is the producer and the host of the Great Reset Opportunity Report. Chris, wonderful to have you again, as always.
Thanks, Rich. Great to be on again. And for those who may not know Rich, my co-host, Rich is the COO and president of Asset Strategies International. He's been an integral part of Asset Strategies International for over 20 years. Pretty much everything on the day-to-day reports to Rich. He does a great job over there. Prior to ASI, a very notable part of Rich's career was he went to West Point, and then served in the military from 1987 to 1993. And when he left in 1993 to come into the private sector, he had achieved the rank of captain. So he has some great leadership experience, which obviously ASI has greatly benefited from. Now at ASI, not only is he running the day-to-day, but he's a prolific writer. He contributes to their regular newsletter, their weekly bulletins and alerts. And if you ever were to go onto the road to some of the events that are some of the big investor events, especially those around mining and precious metals, Rich, you're sure to run into Rich. So he hosts a number of workshops and seminars. Except for that slowdown during the COVID, Rich was always on the road as a subject matter expert. So always great to be with my friend Rich. As he said before, we figured there's so much interest in the crypto space, we had to bring someone who's truly in it in a big way to contribute. And I reached out to my friend John Denza, a great guy. John's got a long history, always working in exchanges. So at ASI, at ErisX, he is the chief commercial officer. And ErisX is a substantial exchange in cryptocurrency. They trade in spot and the futures. And just to add to his experience in exchanges, before ErisX, he was with the BATS Global Exchange, which is a stock exchange, an integral part of that organization. They were eventually taken over by the CBOE. And interestingly, ErisX has recently been taken over by the CBOE. It's going to give ErisX a lot more heft and power. I see a pattern here. I guess the CBOE knows wherever John is, that's where the value is. So they just keep buying out his shops. John, great to have you on.
Chris, thank you for that great intro. And first off, Rich, thank you for your service. We do appreciate it. And it's truly a pleasure to be here today. As Chris mentioned, the Chief Commercial Officer of ErisX for digital asset exchange focused on spot and futures. My background has been in traditional finance before I landed in crypto, having worked at NASDAQ, BATS, CBOE, and Island ECN. Most of that time in a sales capacity over the past 20 years, either focused on equities and options. And then I would say about 6, 7 years ago. It's kind of funny. My wife was actually the one that turned me on to crypto. She had just left Bank of America and was doing some research, was concerned around the upcoming election around Trump and Clinton, and was worried about what was happening to the dollar. And she stumbled across Bitcoin, and I just took it to the next level. Started investing and became enamored with the product and fell down the rabbit hole. And 3 years ago, I interviewed for ErisX, and here I am today, leading their sales and BD efforts.
Orange pilled.
It's great to have you on board tonight.
So true.
And I think we're going to get an insider's look at a lot of the crypto world. So let's start off. There's so many changes happening over there, and there's so many, things that people are looking for, legislation that's going to come out, where is this asset going? But let's start with something that's in the news a lot. So Venmo and PayPal and institutions like that are now getting their feet wet. They're getting involved and embracing cryptocurrencies. So what could you say is the significance of that sort of recognition and embrace of the crypto?
Absolutely, Chris. I actually am attending the STAC conference, Security Traders Association of Chicago right now. I'm in Chicago. And, as a great lead-in, I found they shared a great stat on one of the panels earlier today. The person speaking, that the panelist said that there are 140 million people that own some form of crypto. And to put that in perspective, think about this. 140 million people is almost like saying that every resident, I don't mean to pick this country, but every resident in Russia actually would own some form of crypto. There's 146 million people in the population of Russia, 140 million people own crypto. And another stat that was mentioned was 85% of millennials have actually owned crypto at some point in their life. I mean, it's just, the growth is unbelievable when you think about it. And to kind of lead into your point that you were saying before about PayPal and Venmo, about 6-9 months ago, PayPal made the decision to offer access to crypto on their platform. And to give you the scale of that, there are 350 million people that use PayPal. So you basically overnight, you went from taking it from 140 to 350. It's almost like it's 2.5x. Overnight, you're expanding the network of people that have access to crypto. And to take it a step further, Venmo did the same thing, and they have 70 million people on that platform. So now between the two of them, 420 million people could go in and purchase crypto. And if you take it a step further, think about it in this regard. There's only ever going to be 21 million Bitcoin ever minted or created. So it really comes down to supply and demand, and there's going to be a limited supply at some point. And even at this point, there's a limited supply with the amount of people stepping into the asset.
If I could just follow up there, John, just to, this is major, obviously. When institutions get involved, then it makes it more accessible, allows it to spread. You get greater, more people have the ability to touch it, as you say. Do you have any stats since they brought all those potential users on? How many are actually taking the plunge and doing something with it on those platforms? Any stats out on that? It's
hard to think about the stats, but I would think about it from this regard. Just think about the type of products that are actually being, first off, before I talk about the products, I think it's a good segue into the executive order. So here it is. Biden actually comes out with a framework. He's trying to define a framework or how we should support crypto. Well, I think that the struggle that institutions have had throughout time and have not had that full adoption is they don't know what that framework is to work within. They don't know the regulatory structure of how to operate within the space. Once they're given the guidelines and the direction, that's where the asset class has the potential to really take off. And if you're even thinking about it from an institutional standpoint, what really drives the institutions and what brings their adoption is being able to create products that allow them to offset and hedge too. Like, it's one thing to have spot, but to also create derivative products like futures and options on top of that asset class to create an opportunity to hedge. Really, that's what drives, I think, the institutional adoption.
Greater liquidity.
Now, let me just change gears a little bit. So we've talked about Bitcoin, or you've talked about Bitcoin. We know there's hundreds, maybe there's up to 1,000 plus different cryptocurrency offerings.
18,000, if my Google machine was right today, 18,000, I looked it up today.
So I
scared to think of how many of those are going to end up fading out over time.
Any advice for individuals who are thinking of getting into crypto? Should they just focus on Bitcoin, or, do you think there's like maybe a basket of 10, 20, just high level, some of your thoughts on?
Yeah, I think that it's like anything. I think if you're going to dip your toe in the water, you want to go with like a blue chip. It's like you're not going to go in and buy an OTC out of the gates to start investing in equities. You're going to look for something that's stable and has a history behind it. But just think about it this regard too. Speaking of volatility, if you look at Tesla stock, I would say 2 years ago was trading around $85. It went through a 5-1 split, had great earnings recently, and now it's trading at 1,100. So think of the 5-1 split. That's like 5,500 at that point. You're almost looking at a multiple of 65x over the last 2 years. During that same period of time, we actually saw Bitcoin actually grow in value from 6,500 to about 40,000. That's 7x. So my point that I'm trying to say is people get concerned about these movements in the coin and so forth, but when you compare it to certain equities, there's actually more volatility in them as an asset class. And look at how established equities are. So to take it back to your point is, I think that people should do their research. I think that the smart thing to do is maybe make an initial investment in Ethereum and Bitcoin. Those are kind of the blue chips. And then also take the time to understand how it is to maybe, if you open up an account, move it from your account to a wallet. See what it's like to move it from one account to another. Get comfortable with trading on the exchange. And then once you're comfortable at that point, there are so many other great projects out there, but you got to do your due diligence, read up on the company. And I would say that a good barometer for making a decision is there are websites out there that rank the coins by assets under management. I think CoinMarketCap is one example of that. Looking to the top 10 or 20 is also probably a safer bet than buying the latest Tiger King coin that just came out. That's going to eventually, be a fad and then go to zero.
Mm-hmm. It's good sound advice.
No question. All right. If I'm going to kind of switch gears here a little bit, because I hear this all the time. I do speak at conferences. I do get a chance, whether it be virtual or in person, a lot more in person now. We're starting to get back out and talk to people. But all I ever hear is gold versus Bitcoin, right? Bitcoin versus gold. Which is better? Which should you have? Gold's done. Bitcoin is the new gold. All sorts of variations on the theme. I think there's a lot of ways that they're both similar. I think there's a lot of ways that they're very different. Maybe we can touch on a little bit of that with an insider who understands Bitcoin. He understands, the scarcity, the hardness of Bitcoin. And I'm gonna go here, John. We were joking around before we started. If you look at the backgrounds, John said he was jealous of our backgrounds because we had gold coins and he's in Chicago traveling. He's just got a blank wall. And we're like, well, because gold's real, right? Now, I understand.
That's how you define it. I don't know if I could just say that Bitcoin is fake, but I'll go with it.
No, obviously,
it's not physical.
the math
You
is
can't
real.
touch it and feel it.
The math is real is what everybody that I trust in that space tells me. But maybe you can touch on some of the similarities and some of the differences between those two asset classes.
Well, let me start with the differences. And I love to use this as an analogy. Think about it this way when you're using digital Bitcoin to purchase goods. Let's say you are a customer and you walk into a Starbucks and you want to make a purchase. You want to buy a venti latte, and you go to the counter and you hand them a gold bar or a gold coin. What do you think the lady behind the counter is going to think? She's going to be like, what am I supposed to do with this? I can't break this. I can't shave a piece of gold off and then think that that's going to be the $3.50 to pay for the venti coffee. But if you have crypto, if you have Bitcoin in a wallet, just like as if you had one of those barcodes on your phone for Dunkin' Donuts or Starbucks, you walk up to the counter, you scan the barcode, it deducts it from your bank account. Same thing happens with crypto. You can actually have an app on your phone that actually deducts that from your account directly. So from a practicality standpoint, it's much easier to use in everyday life, right? Now, if we're going to look at the comparisons, I think there's so many parallels between the two asset classes. I mean, just off the top of my head, think about it from storage. There's miners of Bitcoin, there's miners of gold. Think about it from even a fragmented pricing standpoint. The price of Bitcoin is not the same here in the United States as possibly an Asian exchange where they have the ruble Bitcoin pair, and people are trying to get out of their local currency because of hyperinflation. So there's three easy like examples where there are parallels where between the two of them.
So I guess one of the takeaways, at least I got from that, since the example was used of buying the latte, is, you know, when Bitcoin first came out, and I actually had been on interviews or interviewed some of the early champions of Bitcoin, but it was, what was it? Was it going to be money? Was it going to be a store of wealth? Was it going, you know, it was trying to define itself, and time needed to pass. And I think, as you said, using it to buy the latte makes it a medium of exchange, not necessarily store of wealth. They could be two different things. So where you're not going to walk around in an efficient way using a physical bar or coin, because making change and everything that goes with it is just not practical, where it is with Bitcoin. But there's where the two are defining themselves, and they both have a place in this world. So at a high level,
absolutely,
what I believe is, and I never believed one was a replacement for the other. The reality is Bitcoin is more of a replacement to a fiat currency like the US dollar than it is to gold. Gold kind of, I believe, will stay as a store of wealth. It's the fiat currencies that are being abused through printing, you know. And,
great point. Great point, Chris.
Because as you said, even in the beginning of this interview, you know, one of the value propositions with Bitcoin is that it has a defined, it's a limited amount that will ever be produced. So it doesn't fall into the trap of what all the fiats do by abusing themselves and overproducing. So,
well, on top of that,
at one point I just wanted to address with Chris. So for the audience here, you know, I talked about that limited supply. Just 2-3 weeks ago, we minted our 19th million Bitcoin. There's only going to be 21 million ever created. And the way that it works with Bitcoin is there's a halving event every 4 or 5 years, which means you were maybe solving this complex equation as a miner and you were given 12 Bitcoin, you know, as a competition. Then it went down to 6. Now it's at 6. It's going to eventually go to 3. Getting to the 21 million because of the halving is actually going to take, I think, out to 2140 to be able to complete the full cycle of the release. But think about it, 19 million are already in circulation. There's only 2 million more that can actually be created. And it goes kind of ties to what Chris was saying about, you know, you've got the Fed printing money, the Treasury printing money versus, you know, this limited supply.
So maybe I don't go to Starbucks enough, but do they take Bitcoin now? So we're talking about this adoption and using it as money. And I think that's the importance of the Venmos and the PayPals and other institutions coming online. The big thing is online retailers is part one. So that's one question. How many of those folks out there are actually taking it? And then two, you know, I've had a number of clients that wanted to speculate in Bitcoin. They just wanted to hold a little, buy some, you know, throw $10,000, $20,000 at it, you know, and just leave it there and forget about it. And they started down the process and they didn't know how to do it. So that's the other part of adoption is how do you get involved? Where does the person who doesn't know a damn thing about Bitcoin get some and be able to transact and use it and hold it and whatever else?
So first question, so about the Starbucks. Starbucks isn't technically there, but they are working with people like Bakkt, which is a company called, you know, which is under ICE. It's their futures exchange. So they've been working with Starbucks where you can almost do a daily future with your crypto, your Bitcoin, and they'll lock in the price and then they eventually get paid. That's a work in progress. But there are hundreds, if not thousands of merchants that are already accepting Bitcoin as payment.
Yeah. Because most of the folks that I run into at this point, what they're doing is they'll take the Bitcoin, but they're taking it through some sort of converter, middleman, or middlewoman, whatever the case might be, middle person.
Of course.
And then they're immediately converting it into the dollars they need to settle the transactions that they do on a daily basis. But that's not really the pure efficient system we're looking for just yet, right?
No, I agree with you. So,
and I think that's just a maturity, because I know vendors that will say we take Bitcoin, but because they have to pay their suppliers in dollars, they're forced to immediately convert.
Yep.
And only because it's in the early stages and it will change with time, but they actually charge a little bit more if you pay with Bitcoin because of the cost for them to make the conversion. But once, of course, adoption gets more widespread, that will disappear. But,
Yeah, I mean, it's like any
just
other
some of the
asset
early
class.
growing pains, that's all.
The greater the adoption, the spreads and the fees compress. That's what happens because of competition.
Are they accepting other cryptocurrencies like the
Ethereum,
the
Litecoin.
PayPal's or the retailers that are accepting Bitcoin? Are you seeing them? Are they doing that, extending that courtesy or that acceptance to any of the other cryptos, or is it pretty much just Bitcoin?
Yeah, I would say that there's certain merchants. I feel like Elon Musk, and I forget which coin it was, if it was Shiba Inu or something else, where he was actually saying that people could use that to buy a Tesla at some point. So yes, there are different monetary. It depends on the coin that you're using. You got to use a coin that's actually a store of value versus let's say, an Ethereum, which is more about the protocol and the underlying technology.
And I'll just going to change gears for a second, and it's really just one thing about because the question is, is gold obsoleted, right? And if you look at what's going on at a very high level geopolitically right now, it's interesting, with the sanctions of Russia and accepting forms of payment for commodities. It's interesting how gold is a integral object as a form of payment. And there's actually where the Russians are trying to loosely link the ruble to gold. And also there's been, France has recently repatriated their gold. So what you really see going on is no one's trusting anyone, and they all want possession of their gold, which tells us, right, if the nation states, if the central banks, but the governments of sovereign nations, they still understand gold's place. And again, that's that's a store of wealth, and which is applicable. And it's a good store of wealth on the sovereign level and also the individual level. But so like a lot of things, when people sometimes get ahead of themselves and they think something is going to jettison or replace something, it usually isn't. It's just a new, and then that's what it is. The cryptos are new, and they're going to have a place, and they're finding their place. But as I said, nothing else is going away except maybe in the next few years, a fiat currency or two may disappear. Who knows?
Well, you talk about the gold backing. Well, even think about it from a legal tender standpoint from El Salvador. That's legal tender down there now, and people are using it as currency because of hyperinflation in their own country and the devaluation of their own currency. What were you gonna say, Rich? I'm sorry.
No, I was just going to talk to you. You touched on it, and I don't know why we didn't have it as one of the things we were going to touch on, but we're going to touch on it. Central bank digital currencies, and this is one of the biggest differences or similarities, I guess, between crypto and gold is the decentralization, right? Okay, my biggest fear is a central bank digital currency, and I know every country is looking at this. This is a great way for them to take a wonderful concept, decentralized fiat money, right? And bastardize it, if you will, to their own intentions, which is a centralized, total control currency mechanism, distribution. And
Scary thought.
Yeah, I think it's the end of privacy as we know it. It is total government intrusion in your personal affairs. And I think they're all rushing to get that because that opens up all sorts of doors for them, right? They can put the money in and out of your account as quickly as they want. If you're not spending money fast enough, they can take it away from you, right? I mean, that concept's been kicked around in the past. I'm very leery about central bank digital currencies. And every time I hear somebody say, well, it's a great way to efficiently pay people and all this other stuff, I just think there go more civil liberties, there go more freedoms and, right out the window because somebody thinks it's going to be a good idea to do this, that, or the other. And the unintended consequences are going to be horrible.
Well, I mean, it's somewhat happening now in a sense, if you think about it, because you look at dollars versus crypto, Bitcoin. If you have somebody doing nefarious activities with dollars, it's relatively easy to wash it through the system and not be able to track it. If you're using Bitcoin and you move it from one wallet to the other and then to another wallet, that footprint is immutable on the blockchain. Yeah. You can back up into the person that did the activity. And as an example, we all know, I think it was like a year ago, where there was the hack of the pipeline down in the Southeast.
They got
And
the
they were
ransom money
demanding-
back, didn't they?
Yeah, they got their ransom money back because it's exactly it. They were able to walk it back and identify who the person was.
Yeah.
So it is happening, but even, Rich, there are coins out there too, like Monero, that's a privacy coin, where you cannot find out who the person is on the other side of that coin. It's completely, you don't know who it is.
Gotcha.
And I just have to share with everyone, because I remember this from years ago, when there's a certain amount of period of time that passes before the minutes of Fed meetings, like all the minutes are released to the public. And way before crypto was on the average person's even heard about it. This was in the early 1990s. They were talking that ideally, they were talking about putting a time value on money, where Rich touched on this a minute ago, where you would get your paycheck, say $100, and it has $100 worth of purchasing power for 3 weeks. If you don't use it, it gets, could only be achieved with a digital currency.
Yeah, it's like one of those prepaid Visa cards that, or whatever, credit cards that eventually,
Just burn. It's almost like you burn it at the end.
It says $50 on the front, and when you finally spend it, it's worth 10.
Yeah, and that would force everyone to be a consumer on their terms, which is obviously a pretty hellish environment.
Yep.
And would eliminate people being able to be savers and to build for the future. So, so it's been in their on their radar, and something they've wanted to do for decades. But it'll be interesting what happens now in the next few years. So
one thing I want to say, Chris, for the audience to properly understand, we talk about the having a central coin and the negative effects of it and so forth. But think about it from a standpoint of the movement of dollars across the system. There's reports like Ripple XRP is under investigation from the SEC for potentially being a security, and it's been under review for quite some time. But there's studies where right now, if you want to move money internationally, you have to use the SWIFT system. That SWIFT system is archaic, it's old, it's outdated. It could take a week to move something to a distant country, and they're going to charge you 1% on that, an exorbitant amount of money, and it's only going to happen during business days. Well, if you take a certain amount of Ripple, and then it's been known, like somebody's moved 30 million of Ripple to another wallet in less than a minute, in seconds, and the transaction costs less than $1. Think about it. Like, I almost look at, there's a great analogy too, like, think about it. If the internet launched, and look what it did to retail over time. Nobody had a vision of what retail would be like on the internet 10, 20 years ago. Well, the same thing is going to happen to banking with crypto. We see the early stages now, but there's going to be a full transformation on how we do banking in the future. The problem is that the banks are scared of it, and it's a threat to their business model because they're high fees.
Well, that's how they make their money, right? On the fees.
Exactly.
Well, and look, and that's like all technology, right? It's how it's going to be used, right? Used properly, it's a great way to improve our lives.
It's deflationary by nature, right? So,
it can be a form of terrorism, right? Or oppression. But and as far as the SWIFT system, of course, it's absolutely ridiculous. Being in our business, we deal with wires all the time. The idea, especially an international wire, at $50. For what, right? It's just an electronic message that's going.
it's messaging.
It's like, what are we doing by messenger pigeon? Even domestic wires at $30, $35 for an electronic message. And it's been a monopoly that they've controlled, and they make a fortune off it. And they know full well it's an overpriced service. And until something comes along to challenge it, they would never change. So
well, JP Morgan actually created their own coin internally because they've got so many Fortune 500 companies on their platform and do banking with them. They've created, I think it might be called Onyx or something, where they basically mint the dollars into the coin. It goes to the other institution. They receive it, they convert it, and then they burn the coin. It's even starting to take effect in places like that, is my point.
Interesting. See, this is why it's great to have you on. When you didn't even know what's happening. So, Rich, anything else on this segment, or?
No, I think that pretty much covers it. I just, every time we talk about Bitcoin, I want to get my thoughts out there on CBDCs. Where I think concocted in.
I agree with you. It's kind of scary, but we'll even think about, before we segue to the next, Rich, they're already doing it in China. China
Yeah.
already has their own central coin, and they forced 6 or 7 retailers to be able to force them to accept that coin.
No surprise that they take the
Mhm.
lead.
Yeah.
Of course, which is frustrating in the U.S. because I feel like we're a laggard when it comes to the regulation and market structure.
So it sounds like we're, at least because we all want to get along here, that we all agree, gold, cryptocurrencies, they're both here. Gold's not going away, and crypto's going to continue to grow and get integrated. So from a portfolio perspective, John, what do you see? You know, which should a person be putting both in their portfolio, the precious metals and the cryptos? You know, what would your personal opinion be? I know you're not giving advice, investment advice, but your opinion.
I mean, I think that your general audience is always going to believe in diversification. You never want to put all your eggs in one basket. And I'm not saying that you need to put an overweighted part of your portfolio into crypto, but if you're going to have your portfolio include real estate, precious metals, equities, then you should actually consider having a small portion of it in crypto. And I, you know, there's all these reports that have been coming out, and I'm just thinking of the Citi one where they predict the price of where Bitcoin could go. Just think about it. If everybody had 2 or 3% of their portfolio in Bitcoin, and there's only 19 million of them available, price is 40,000 now. In their report, it sees it going to 300,000 to 500,000 at that point, just because there's that lack of supply there.
So then let me just add a little bit more then. Putting crypto in your portfolio, you can buy the crypto direct, right, and have your wallet. And I know there's things like the Grayscale Trust, right, which is an exchange traded product. And I guess they're not approved in the US yet, but I think Canada has like Bitcoin ETFs and all that. And that's just—
I just saw the announcement about Australia today too.
So
they're going to be launching a crypto ETF.
Sure, and that's just a matter of time before it becomes available here. Do you have any advice? Is there an advantage for a individual to be buying just the Bitcoin direct? Now, one thing I know, because I had some Grayscale Trust, the advantage to Bitcoin direct is you could trade 24 hours a day, every day. Problem with things like Grayscale is since it's an exchange traded product, you can only buy or sell as the exchange is open.
Mm-hmm.
Besides the management fees, which they have on top.
I was just going to say, plus you're adding on fees to that.
Whereas
it's like you and me, Chris. I mean, would you buy an ETF in gold when you and I both know we can full well buy it cheaply directly? You know,
and actually own it, yeah.
I can't stand paying the extra fees.
Yeah.
But go
So
ahead.
John, do you have any thoughts on that?
Yeah, I think part of the problem here is that, I mean, it's great that Grayscale has created that, but you touched on a great point there. You're paying their management fees for the product. It's a closed-end fund. You can only trade it at certain times when the window opens up, and it's very limiting in a sense. And think about it too. You own GBTC. You own there's underlying Bitcoin supporting that price, and they have it in assets under management, but at the end of the day, you really can't do anything with it. Like, if I own the crypto and it's in my wallet, I can purchase goods. I can do things with it. I have access to trade it 24 hours a day, like Chris mentioned. There's just greater flexibility with owning it outright.
Well, to what Rich said a minute ago, it's the same as saying, if our clients actually own the physical versus GLD. Well, GLD is tracking the price of gold. You don't own it, and you can't pull the gold out, right?
Yep.
That individual will never be able to actually take the physical and say, well, I'm just going to take my physical, I'm going to go store it somewhere else. So it's obviously when you put these product wrappers around it, like they're doing with the cryptos, like they did in the precious metals world. And there's a similarity, right? There's where we become similar. The physical gold world, like where Rich and I are involved. And now I know you're in both, right? John, you're doing spot, and you guys are doing futures and options. So you're a full shop. But that's—
I'd love to pose a question to you, Chris, because we're talking about ETFs and so forth. What happened to gold at the time it became an ETF, prior to an ETF, and the price of gold after an ETF, and to where it is today? And think about that trajectory and what would happen to crypto. I mean, do you know what the price was just before it turned into an ETF?
I think it was 2003.
Yep, I remember that. And my recollection, so we were a young company at the time, but we were in business. And the reason I remember at the time is there was a lot of money going into gold in the early 2001 and 2002, right? It was the beginning of what a lot of people recognize as a secular bull market. And back then you had two options. You either bought futures, you bought mining shares, which isn't gold, or you actually had to buy the bars and coins. And the feeling was, at least a lot of people in our world, was Wall Street was seeing the writing on the wall and wanted to create a product to try to stem the flow from clients at places like, you name the broker dealer. So instead of them pulling the funds, their wealth manager would say, well, we don't need to do that. We took care of it for you. And it did stem a lot of money that would have flowed into the physical gold world. And of course, there's a big question mark of how much gold is really in the 800-pound gorilla of ETFs, GLD. So I think it tempered the price. It took pressure off the physical market because the demand on actual physical gold was not the same by buying ETFs as if you went to a pure precious metals dealer and actually bought physical
By
gold.
the same token, Chris, and I'm partial to the bullion and owning the real stuff, but I would dare say that it brought a lot of people into the metals market that would never
That's exactly where I was going to go
have
with that.
owned
Yep.
a gold coin in the first place. If they had to go buy a gold coin, have it shipped to their doorstep, they were never going to buy it. They had to go to a coin shop, pick it up, they were never going to buy it. But if they could put it in their stock portfolio and own shares in GLD, they'll participate in gold. And so I think it had something to do with the upward trajectory of the price. I think there were a whole lot of other factors, and we were going to be in a bull market regardless. But I think it brought other people into gold buying that would have never done it otherwise.
That's exactly what I mean. You actually could go into your Ameritrade account, E-Trade account, buy some GLD, and now you have exposure to gold in that regard. I mean, the point I'm trying to say is GLD is backed by, I'm looking at it online right now, almost $70 billion is what the actual market cap of GLD, which means that they own that in the inventory to be able to say that's why it's the price.
I'm gonna have to disagree on one thing. If you read the prospectus, if you read their prospectus, so it's not speculation, that is not guaranteed that that's in 70 billion in gold. All right.
Okay, you're going to know better than I do. I'm not going to argue.
There's multiple pages about risk, and they talk about holding gold in allocated and unallocated form. Unallocated means not necessarily there. They also talk about the gold is held in sub-custodians, which they do not audit to ensure the gold is there. That's a risk. So my point is, I agree it raised the awareness of gold, but there's enough. And you wouldn't put these things into prospectus if they weren't probably that true. Why would you say you hold gold in unallocated form if you never buy it? If you always buy it.
Is it a safe bet to say, Chris, that they have inventory to
they do. Look, so no, we're just getting more details.
I agree with you. So the kind of where I was going is, if you have these ETF products launch, they're going to have to go out into the market and buy the underlying to support the product, and that just creates more demand with limited supply is kind of where I was going with it.
And look, and also I don't want to just focus. All ETFs are not created equal. I will say that there are other ETFs that are truly 100% backed ounce for ounce with the gold and the silver that they're selling. So no, there are ones that they cost a little bit more, right? And the reason it costs a little bit, I would just submit the reason it costs a little bit more is because they're not relying on any unallocated positions or rolling futures options. But yes, it does add to demand for the metals.
Mm-hmm.
Gotcha. Well, I just want to encourage everybody that's listening, if you have questions, go ahead and type them in. There's a Q&A button down the bottom. Go ahead and let us know what your questions. I do have some that were sent in ahead of time. I think one of them we've already touched on. It said basically Joe in Phoenix was wondering, will Bitcoin or some other crypto eventually replace gold? I think we've already dealt with that. There's another one here. Is there room for both gold and Bitcoin in a portfolio? From Mary in Milwaukee. Now, we've started answering that question, but I want to dig a little deeper into that allocation because I think we all agree there's room for both. What concerns me about Bitcoin, and I own some, so I'm not a never Bitcoiner, right? So what concerns me is I look back over what 10 years of existence, or actually 13 years, right? Since 2009 is when it came
That
out.
sounds right. Yep.
So 13 years of existence, we've had 16 different times where we've seen a drop in price of 40 or 30% or greater, up to like 80 some odd percent. The last one being November of last year to February this year, where we went from 68,000, the all-time high, down to what, 38, 37?
Mm-hmm.
Something like that. So, I mean, that was a smallish one. That was only 44% drop. And it concerns me, the folks that say that Bitcoin is a store of purchasing power like gold. My store of purchasing power doesn't have those wild gyrations. I think my gut feeling is acting like a speculation, because that's how people are treating it, right? Elon Musk tweets and they sell or buy depending on what the hell he just said. And they're trying to make a quick buck in it. That's not what a store of value does. So I treat it as a speculation. It's a tiny portion of my portfolio. It may not always be that. It may evolve into something else in the future, but I think as long as people buy and sell for profit only, then that's the way you got to buy it in your portfolio to protect yourself. What do you think?
I think that if you're looking at it from 2009, the coin was actually held in the hands of only a few people that had very large positions, also known as whales. And as the asset class develops and matures, more participants come in. And if you look at before the crypto winter in 2018, it was all retail that was driving the price. But now it's the institutions coming in, and those whales don't have the same power over the asset class to swing it in certain directions, because it's actually spread out. And then it kind of ties into the products that I'm talking about, creating options and futures on top of that product to hedge the pricing really is, limiting the volatility. And then also to go back to what you were saying about the dips, if you track the dips over time, you might see 70 and 80%, but over time, as the asset class has matured, this latest dip was what, 45% this time? Mm-hmm. Those dips aren't as aggressive, and you're not seeing the price gyrations as much. Here's another great stat. There are companies out there that you can do lending with. There's a Celsius and BlockFi. So institutions, what they'll do is say, you know what, I don't have this in my portfolio. I'm going to borrow against that. I'm going to, put up collateral, and I'm willing to pay 10% on that asset to borrow that coin, right? It's a pretty high amount. Well, when the volatility was there, 20, 30, 40%, that's a pretty good deal. 10% and I could get 30%. Why wouldn't I do that? Well, those accounts, the BlockFis and Celsius, they have rates that they offer retail participants. I actually used it when I parked some Bitcoin there and I tried to generate yield. When I first started using them, it was one Bitcoin was 6%. A month after I did it, it went from, okay, now it's half a Bitcoin is 5%. The latest pricing changes they had, it's like a quarter of a Bitcoin will pay 4%. It's because they're not getting the demand from other people, because of the volatility is not the same as it used to be in years past. So yes, it is speculative, but it's not in the same kind of level that you would think
it's
a few years ago.
Down.
Yes,
so
exactly.
Let me ask you then, as it moves forward, does it choose one path or the other? Meaning, if Wall Street's going to get more and more involved and productize it, Wall Street likes volatility. That's how they make money.
Of course.
Traders. Now, no one likes something that trades sideways. If you have money, you like consistency. Of course. Right? If Bitcoin buys, a latte today, it, ideally should buy the same latte 2 years from now, right? No inflation, deflation. So
hopefully a smaller piece of your Bitcoin at that point.
Yeah. So this is what direction you think it's going to go? Continue to settle down and become extremely consistent, like ideal money, right? Or does Wall Street get its hands on it and turn it into a more volatile, speculative? It just seems like you can't really.
I almost look at it, Chris. I think it kind of ties back to what I was saying about the limited supply. I think as you see these other institutions coming in, they want to create their own inventories to work off. I mean, your audience has probably heard of the firm called Citadel. Citadel is one of the largest wholesale market makers in the world. they dominate in equities and options. They take retail flow from Robinhood and E-Trade and Ameritrade, and they pay them for that flow. Well, they just made an announcement that they're actually getting involved in crypto. They just got, I think it was $1 billion from Sequoia and Paradigm to start actually creating a wholesale business. The reason that they were actually creating that wholesale business for crypto was not their decision. They tried to avoid it. Ken Griffin was on the tape saying it's a speculative, or I'm not going to get involved. No, his customers forced his hand to get involved in the asset class. So the point is this limited supply and not being able to print money like we do in the US is going to cause the price to increase over time.
Gotcha. Same concept.
Hopefully more tempered than a wild gyration.
Yeah. Same concept as gold. There's so much of it. And if you measure it with basically constantly diluted fiat, whether it be dollars, euro, yen, whatever, it's going to take more of them to buy it in the future. Same concept. It's one of those similarities. You were going to say, Chris?
No, I was going to say, do you have any more questions there?
Oh,
Yeah,
and one other thing too, just to add, Rich, it kind of ties also to those products. You worried about those gyrations. Well, if somebody's writing a futures product or an option on that, it's going to limit the up and down side of the product too.
That's true. Good point. I got one question here from Leslie in San Antonio. For us retirees out here, what do you see as the biggest threat to our finances, and how can we protect ourselves? Who wants to jump on that?
Well, it's happening right now.
That sounds like a grenade right there.
Well, no, the biggest threat to the retirement right now, I think, is what's raging and that's inflation.
Absolutely.
Are you talking about Putin's tax here, Chris?
Putin's, which was raging prior to the Ukraine, but I guess the market.
How did he do that? How did he put a tax?
It's amazing. You talk about
a year before he invaded.
You talk about a whale in the market when. I mean, what I see happening, if I could just share, because it's a little bit scary. There was always inflation. They've been underestimating or admitting to what inflation has been for a long time, but it wasn't outrageous. And people believed what they heard. Well, it's not so bad. So I think if a person had 100,000 in the bank or 50,000 or 300,000, they thought, well, I'm not getting any interest on it, but it's going to be it'll stay as it is. Now, everyone's very cognizant that they admit the inflation rate is 8+.
Yep.
It's really, we all know in the real world it's far higher. Now your $100,000, at the end of the year, it's going to be worth $82,000 in purchasing power. And now we see panic. I've also been hearing a lot of stories of people, a lot of people on fixed incomes, unfortunately, having to sell assets to meet daily expenses, right? And this has not happened in a long time. So that, I think, is a threat, not just to retirees, but I think it's particularly rough on them. But this is, it's so pervasive and it's so deadly to your standard of living. Your thoughts? I mean,
I agree with you, but I'll let John go first. What do you?
I agree on so many fronts. I mean, it's just been a compounding effect. Even think about it from the real estate market. I mean, the beginning of the year, we were sub 3%. And now I'm reading rates that are 5% now. It's just making it that much more difficult to purchase any goods. I mean, gosh, we started out at the onset of the Biden administration. And what were we at? $2.20, $2.30 a gallon for gasoline. I was just in California recently, and it was $6 at some pumps. How are you, as let's say, an Uber driver or a taxi driver, and you have a family to provide for? How are you supposed to do that?
Jacking up the rates on Uber. I mean, ultimately, the retail customer is going to pay the price.
Of course,
it's going to be passed down.
It all flows downstream.
Yeah.
Well, I think this is both driving people to you, John, to Rich, to me, because they're looking to a form of money, right? That's
store of wealth.
Yeah, that's going to maintain their purchasing power, right? It's really not about getting rich. It's about maintaining purchasing power, right? And that's where people need to, they should come into the precious metals, not like, oh, I read someone who said gold will be $10,000 an ounce in 2 years. And whenever I hear that from people, I say, you do not want that to happen, even if you own the gold, because the world that we'd be living in, if gold's at $10,000 an ounce in 2 years, would be pretty bad. But the point is, so they're looking for the crypto, they're looking for the precious metals to get out of these devaluing fiat currencies.
I'll throw this
true.
out there, and I agree with you, Chris, that I think the number one killer of fixed income, i.e. retiree portfolios, is inflation. It's basically having enough money to cover whatever you thought you needed and you need on top of that, and whatever you want to have on top of that. And then all of a sudden you can't buy all those things and you're past your earning years. That is crippling. No two ways about it.
I mean, Rich and Chris, you guys have gone to the grocery store. You buy like any kind of potato chips or crackers or whatever it may be. You open the bag, or you get the bag now. You're like,
bag of air.
This is half the size. Yeah, my wife came into our bedroom tonight. She's like, look at this Lay's potato chip bag. I looked inside. There was this much in the bottom of the bag, and even the bags, like a Triscuit, like a box of Triscuits. It's like a third less than it used to be.
Oh, it's a little.
They're like
now.
slipping it in without you really recognizing it.
We don't want to hate
a
mail from
little
Triscuits
shorter.
and Ruffles or Lay's or whatever.
Yeah,
So.
you won't really pick up on this, but
But where I was going to get to is this. So I'm going to be speaking at a couple conferences coming up, Investment U and the Money Show out in Vegas, the beginning of May.
Mhm.
And one of the things I'm going to talk about is the best performing assets since the start of this millennia. So January 1st, 2000, you would think it's the NASDAQ, S&P, right? Wouldn't you? Okay.
not.
It's not. I'll give you a hint. So platinum is up 60% in 22 years. Palladium, 131.5% in 22 years. Dow, up 206.3%. That's pretty good, right?
Mhm.
S&P, 201.9. NASDAQ, 218.9. That's solid performance.
Mhm.
Silver, 363.5%.
Wow.
Gold, 576.9%. I bet you can probably give me some figures, not to 2000, but to 2009 on Bitcoin.
I mean, I don't know you got to think we were sub dollar. We were trading it's sub penny at one point with Bitcoin when it was
the
launched.
lowest price I saw recorded was like 109 or something like that.
Yeah, I mean, think about everybody knows the story about the pizza guy who used the Bitcoin to buy pizza, and now the Bitcoin's probably worth like $20-30 million for that pizza or something crazy like that.
Yeah. So, I'm not saying put all your eggs in one basket, but I'm thinking you ought to have certain eggs in that basket. And I think I just
You always
covered
want to have a
few.
little bit of exposure.
Yeah.
You don't want to miss the opportunity.
No two ways about it.
Great.
I'll reach out. I think that we've exhausted the questions. Any other questions from anybody, whether in the Q&A or the chat box? Any parting thoughts, maybe, that either John or Chris want to share? Something you want to get out on this subject that we didn't touch on yet?
John, go ahead.
Trying to think this one through. So, I mean, at this point, I would just suggest to your audience to do the research. And, it might be intimidating, but even if you don't even need to put a lot of money into your account. You could start with $10 or $20, buy some crypto, and actually you can actually tell your friends, then you have it in your portfolio at that point. And something that I've actually come across that people should even consider as an audience is one of the biggest areas of growth for me as a company this year has been in the IRA space. I've been working with IRA providers where, as your audience has their IRAs, their retirement accounts, and people are starting to actually use their IRA to purchase crypto. We've all probably heard of the Peter Thiel story about him buying, placing a company within his IRA, and it grew to $5 billion. Well, think about it. If you bought crypto in your Roth IRA and you're not paying taxes at the time of you're going to be withdrawing in your retirement age, I mean, that's a no-brainer at that point. If the numbers that I'm saying are correct and it gets to 500,000 and you buy in at 43,000 and it's after tax money, that seems like a win to me.
I've got an aside on that. So last week I was talking with one of my old friends, somebody I've been working with since 2001, a trustee administrator, right, for IRAs. And I said, so how's business going? He's like, going good. I'm like, you're doing a lot of metals business. We're doing a lot of business right now. And he's like, we're doing very little metals business. And of course, they were doing a lot of metals business back then. I said, what kind of business are you doing? He's like, Bitcoin. So they're open accounts left and right. So that just corroborates what you said. My big takeaway, and this is really what I was kind of hoping to get out of you tonight. And I don't know, maybe I should have prepped you for it. We'll see.
Maybe I have the right answer now.
I alluded to it earlier. I mean, I have some good clients that just want to participate and they really have no earthly clue how to get started. What's your advice for those folks that just want to hold some Bitcoin, Ethereum, what have you, put it in a wallet, basic stuff? How does somebody who doesn't know what the hell they're doing get started?
Yeah, we actually have on our own website education videos on people on how the market works, how to actually purchase crypto. Kind of ties in what I was saying earlier. I mean, you think about the power of the internet right now and how much you can learn on YouTube. When you type in Bitcoin, there are so many people out there that all have opinions and thoughts on how to do it. It's just doing, typing it into your Google, search button and saying, how do I purchase crypto? There's a wealth of information out there.
Fantastic. Thank you. And Chris?
And of course, I always want people to come to ErisX.com.
Well, I'm going to get to that. Actually, I might as well touch on it right now. So after these webinars, we always do a follow-up. So everybody that attends is going to get an email tomorrow with a full copy of the transcripts. You can go back and listen to it, on the weekend or whatever when you're bored and senseless. But in there, also, we're going to have a link to John, and his company has been so gracious. If you follow this link, basically, and you register for to be a direct member, you're going to receive 1 month of free trading with John's company. So that's going to be in the offer that goes out tomorrow. Look for that in your inbox tomorrow for sure. Chris.
And then also, I would just like to say, Rich, too, one last thing. Anybody in your audience, if they have questions and want assistance or help, my contact information will be in that email. Please do not hesitate to reach out. I'm always more than willing to take time and educate. I think that's a really important part. With my 20 years of being in the exchange space, I think that's one of the most important parts if you're going to be affiliated with an exchange is education. And that's one of the most important things that we should really be focused on.
Best clients are educated clients, no two ways about it. If you care about them. If you don't care about them, then it's a whole different story. Chris?
I don't know if you saw, there's two questions that popped up in the chat box.
I think the first one we handled, the second one.
Yeah, the first one we handled. The second one says trading metals on the blockchain seems like a good idea. Do you have any comments on this and the gotchas associated with it?
I think that's for you, John.
I know of, and Chris might know a little bit more about this, but I know that there are companies that have it on the blockchain, like Tradewind is one of them. Our COO used to be the CEO there. But I would assume that probably Chris and yourself probably have more knowledge than myself when it comes to that subject. Yeah,
I don't actually. I hear a lot of talk about it. Maybe you can weigh in, Chris. I don't know the actual products to go to that you would know and trust. And I don't full well know the advantages. I'm still the physical gold guy. If I want gold, I hold it, but
so, yeah. And here's what my understanding is. The gotchas they bill themselves as you're going to buy and sell gold at almost spot price, and you can store it forever, not a charge. And that there's some obvious things that aren't making sense there, because if something is sitting in a vault, Brinks or somewhere, they're not going to do it for free forever and insure it. So
now I would say be careful here, Chris, because that we helped design the Perth Mint program 25
I understand
years ago.
There's
a different program where
that's a different that's
lowered their operating costs. Basically.
That's a full disclosure, unallocated program.
Yep.
There's a big difference by saying each one is physically backed by a direct bar that is sitting there forever, and you're going to have a claim against it, a digital claim, but there's never going to be any expense associated with storing it and insuring it. It is a very dicey area. So you would have to really look at the documentation and dig in and decide whether you think it is what your expectations are.
That's a great point. I encourage people always to dig into the documentation. If you had done that for a lot of these gold ETFs, silver ETFs, you would realize that you don't own anything. You own shares in an offshore corporation whose business it is to mimic the gold price or mimic the silver price. And people say, no, I own gold. They don't own anything. But yeah, good point.
One
Read
thing,
the
Rich,
disclosure.
one thing I just thought of because I was at the conference earlier and they brought it up was there's a company called Pax that actually has Pax Gold, which is a product. It's a coin. And actually, if you stake that coin, and I'm looking at it online at one of the other, one of the exchanges, you could generate 7 to 8% yield on that.
So interest for a non-interest bearing asset, basically.
Mhm.
Yeah,
I don't know enough about it to say that's good, bad, or indifferent. So don't jump in and start buying packs on that. But yeah, do your due diligence for sure.
Yeah, I would
Absolutely.
weigh in on that. Historically, the only way that really there was income associated with your precious metals is if you leased it out. And that was the only bona fide historic way that is straightforward. There's parts of the whole leasing world that is questionable, like two people reporting ownership on the same bar, but that's another story. But that was the way to generate income on gold. But I don't know enough about that. So again, people should do their due diligence accordingly.
Absolutely.
Your parting shot, Chris?
All right, so a couple things. One thing was our last parting shots about is the world of investing. Neptune just celebrated its 20th year, but the point is,
Congratulations.
thank you. But in all the 20 years, this is the first time because inflation is now an issue, right?
Yeah.
And the first time it isn't about people saying, well, I'm going to sell some stocks and go into physical gold. It's about my cash is getting eaten alive and I'm better off in the metals, right? It's a different driver right now. And what's really interesting, and you see how the customers, how they're reacting. Some of customers, our largest customers, are moving large quantities of money into the metals. Some people are shocking us. You never expected it on some of these folks, but it's turning out that a lot of people had cash positions that were substantial, and they're really panicked about what will happen if we have these inflation rates for several years in a row to a cash position. So, but that serves John, the world of crypto and Bitcoin. And my only point was, it's interesting. The drivers for what's coming into the metals market is different than what was going on in 2008, 9, 2015, because it was never about inflation before. I mean, it was talking about the ultimate demise of the dollar and, too much debt, but not real world inflation. As you said, you go to the supermarket and the Triscuit box is skinnier and shorter, and higher priced.
Yep.
Yeah. Now, 100% agree with that. And that's kind of my parting shot as well. Inflation is for real. We've been writing about this for like a year and a half now, long before Chairman Powell recognized that it existed and that it was significant and not just transitory. And I just despise that double talk. Now they can claim they don't know anything about it, but I'm telling you, central governments and central banks around the world created this inflation monster. And there's only one antidote that I'm familiar with for 5,000 years, and that's gold. Now there are others out there as well, but there's one proven for 5,000 years. And if you're not putting a portion of your assets into gold to protect against that monster, I think you're making a huge mistake. And, I see the action over the past couple of days where the markets pull back, the metals markets pull back, normal profit taking after people went into a long holiday weekend. There was no trading on Friday. So Friday, Saturday, Sunday, there was no trading. People tend to move in the direction they think the future of that market will go when you have a thin holiday trading. So people were pouring into metals last week. This week, they're taking some profits, right? When you see those opportunities, folks, jump on them. That's really my parting shot. Cheryl asked the question, is this recorded? And it is. I mentioned it a moment ago. Tomorrow, everyone will get an email. It will have a link to the full broadcast. So you will have this. If you came in late, had to leave early, you're going to get it. And in there will be links for all of us. So you'll be able to take advantage of John's offer. You'll be able to reach out to Chris for PMC ounce. You'll be able to reach out to us. I am told we're going to have a special offer there for physical precious metals as well tomorrow. So look for that in your inbox tomorrow. We're going to get it and process it as quickly as we can. I just want to take a second to thank you both. Wonderful show. I didn't know John until Chris introduced me. And then we started promoting the webinar, and one of our good friends from 20, 30 years ago says, "Oh, I've known John for a decade." That's Harry.
We go way back.
Yeah, Harry.
Harry.
Yeah. So right away he came in and said, "Good choice," and I tend to agree with him. So thank you so much for taking the time, Chris, as always. And thanks to everybody that tuned in and listened. And we look
Rich
forward
and
to
Chris,
seeing
I
you in the
really
third
enjoyed
quarter.
myself and just want to say thank you. I really, it was a great discussion.
Thanks, John. Great. And Rich, always a pleasure to be with you.
Amen.
Thank you, gentlemen.
Thank you, gentlemen. And thank you all. Have a great night.
Good night, everyone.
Bye.